Afternoon, everyone. Good afternoon. Good afternoon. We will begin momentarily. Today is the fund update call. So we're going to go over a new position that we hold, which is Constellation Energy Group. And why exactly are we holding this position? So we're going to go over why we're holding this position. And we're going to go over, as a lot of you guys have requested, what is the fund performance year to date and all those good stuff, good metrics. Good afternoon, Matthew. How are you?
Good afternoon. How's everyone doing today?
Fantastic.
Good, good. All right.
We just had earnings released from Meta and and our friends at Meta and Microsoft, and they were exceptional. So it tells you, the economy would be doing pretty well. Corporate earnings are certainly good. We had a strong growth quarter when it came to growth in the U.S. GDP in the second quarter. It came at plus 3%. So a lot of encouraging signs that the economy is good and that corporate profitability is good. So we added a new position in the portfolio. So what we've done is we've reduced our holding in Apple because we feel that they're not innovating the way they used to. And what we've done is we've added to a couple of positions. We've added to Bitcoin through IBIT from 6% to 8%. And we've also added a new company called Constellation Energy Group, which is what we're going to go over today. So, Matthew, would you like me to share the screen or are you going to share it?
You can share the screen. Go ahead.
Okay, fantastic. I'm going to share my screen, guys. If you could just let me know if you can see it, be great. All right. Okay, so all right. So fund update call. We like to do the fund update calls once a quarter, sorry, once a month, last Wednesday of every month. Today is the last Wednesday of the month. So Constellation Energy, what is Constellation Energy? Why are we holding this position? It's kind of weird because we're an alpha fund focused mainly on technology plays. But the reason we're adding Constellation Energy, among other things, is because immense amounts of energy are going to be required to fuel the artificial intelligence revolution, right? Now, so when, for example, you do a chat GPT inquiry, how do I do X? Well, that inquiry requires 10 times more electricity than, let's say, a regular Google search, okay? So think of that. Now, if you're using the more advanced forms, they require even more energy. So as we train all these things out, as we move from gas-powered vehicles to electric-powered vehicles, as more and more artificial intelligence programs become available to us, as people use them more and more. I was speaking to a friend of mine yesterday. He's got the professional versions of ChatGPT and Google Gemini, and they're about $300 a month a piece. And he said they're just game changing. So what I'm saying is a lot more people will start using them. We're at the very early stages. So what's going to happen is because of data center, cloud, and cars or transportation moving to electricity, we're going to need a lot more electricity. So we're going to look at how much more electricity we need and why we're adding this position, okay? All right, so let's take a look. Constellation Energy is one of the largest producers of reliable emission-free energy. It was previously part of Exelon Corp, and it was divested to conduct its own competitive generation and customer-facing energy business. It's one of the leading energy suppliers to business, homes, and public sector customers in the United States, including three-fourths of Fortune 100 companies. Constellation focuses on nuclear, hydro, wind, and solar. Nuclear is their bigger one, but hydro, wind, and solar is becoming larger and larger. 10% of the energy is clean. The company's generation capacity right now in megawatts is 31,676. Now, what exactly does that mean? Annual output is nearly 90% carbon free, and that includes nuclear. So they don't do a lot of coal. They don't do a lot of natural gas. It's going to mainly nuclear, hydro, wind, and solar, which is clean. Now, nuclear does have some byproduct waste, but it's clean for the air anyways, okay? So here's Constellation Energy. This is at the end of last year, 31,676 megawatts. Now, the whole point of investing in this is that we think it's going to increase immensely. We know that we're going to need a lot more energy in the future to fuel AI, to transition transportation. We know that's going to happen, okay? Our own generated resources type of capacity. So you can see here on the right-hand side, this little pie chart here, nuclear, gas, and renewable. It's still, like I said, mainly nuclear, but natural gas is a little bit, and oil is a little bit, but 90% of it is pretty clean. If you look at the bottom here, 4,774 megawatts, which represents electricity supplied procured under unit-specific agreements. And this is for the Midwest, Atlantic, and the ERCOT, which is Texas' system. That's how you come up with the 31,676 megawatts. But again, the whole point of this is we think it's going to increase a lot. This is just the United States, okay? Right, let me just keep going. Okay, Constellation has the largest nuclear fleet within the U.S. generation of roughly 22 gigawatts. Nuclear generation in the U.S. is 95 to 100 gigawatts, which Constellation is 22 out of the 95 to 100. So it represents a substantial share of the entire nuclear generation capacity in the States. But we think this number is going to increase rapidly. It equates to about 16 million homes and 122 metric tons of carbon emissions reduced. Constellation operates approximately 10 gigawatts of natural gas, oil, and hydroelectric, wind, and solar. Okay. I'm just going to go here. I'm not going to get too much into it. Why Constellations? Why would it's in our portfolio? Okay. So new technologies requiring reliable energy. Many new news reports indicate that the rapid expansion of data centers and a need for increased energy supply to meet future demand. So we know that we need a lot more energy. Okay. Significant planned investments from hyperscalers such as Microsoft, Google, Amazon, and artificial intelligence technology and infrastructure are further contributing to unprecedented demand for reliable around-the-clock energy in the US and abroad. And you know who this also benefits tremendously? It also benefits Tesla tremendously, because when you produce energy and you don't use it, it goes unused. But if you can store that in battery technology, i.e. megapacks, it can be used at a later time, okay? So you see how this all kind of plays together? So as artificial intelligence becomes a bigger and bigger part of our lives, we're simply going to require a lot more energy. That's it. Who's going to be able to meet this energy demand? Well, we believe Constellation's at the forefront of this. So it's actively targeting data centers, technological giants like the ones we mentioned above, federal agencies, long-term nuclear-backed energy deals. Constellation is prioritizing customers like AI data centers who are willing to pay a premium for reliable, carbon-free 24/7 power. Evolving customer service preferences. Consumers are increasingly purpose-driven and knowledgeable of services that drive decarbonization, leading them to value the ability to connect to and trace the source of the clean energy. So people don't want coal anymore. They don't want oil so much. They don't want natural gas. They want something clean. So you're probably going to see a rapid transition to a lot more nuclear technology and also a lot more solar, wind, and battery. This benefits a lot of the companies that we invest in, okay? Matthew, anything to add here before I go on?
No, I think strategically, I think this is a good this is a prudent choice given where the portfolio is at and what it wants to do, right? Like we have significant holdings in this technologies and industries at the forefront of literally society, right? So it is a fact that energy is going to be an issue. Energy for Bitcoin, energy for data centers, et cetera, et cetera. And this is kind of making an old industry new again, right?
100%. That's exactly what it is. It's making an old industry new again.
So, and we find this quite exciting. So does it diversify away our risk entirely? No, but it does add a little bit of diversification while still holding on to the fund's thesis of, hyper growth stocks in areas that are like, at the forefront of technology, right? So that we believe have the greatest potential for gains. So yeah, and so I believe this fits quite nicely. And we'll see what happens. So we're legging into this thing, very carefully, not in leaps and bounds. And obviously we've done our research on this company before we even wrote a single put, and this is also, I think, the ideal scenario when writing options, specifically writing puts, is good. It's like when and quite effective. Like when you want to have exposure to something and you want to leg into something This gives you a nice little buffer to monitor the situation, get some yield in there, throughput writing, get assigned at the prices you want to while you're becoming more familiar with the position, right? So I think these are all very this we would like to see this align quite nicely. Obviously, nothing is written in stone. There's no crystal ball here, guys. But I think this fits quite nicely. Happy to have your comments as well. But yeah, that's all I have to say about this one.
Yeah, so 90% guys, clean energy. So we're looking for obviously getting some clean energy. We know that nuclear is going to be the largest component of this on a go-forward basis. So policy support for nuclear energy. Nuclear energy is currently the largest source of zero-emission electricity in the United States, accounting for over 50% of the nation's carbon-free power, and Constellation's nuclear plants are meaningful contributors to the clean energy mix in states in which they operate. And now we expect them to open up a lot more of these nuclear facilities, including reactivating 3 Mile Island nuclear facility in New York, upstate New York, which is infamous for the nuclear meltdown in the early 1980s. But that's the idea here. Okay, so technology has advanced quite a bit. We know we need a lot more energy, and basically Constellation is at the forefront of this. Okay. So Constellation has the ability to sell carbon-matched nuclear-backed electricity as a premium product, often 10 to 30% more expensive than standard grid electricity, particularly if it's locked in a long-term contract. So a lot of the companies that we're looking at, the hyperscalers, your Microsofts, Apple, Metas of the world, they want this clean energy, and they're willing to pay a little bit of a premium, and they're willing to lock into long-term contracts, okay? I don't want to get too much into this, but basically what it means is they're willing to pay more. So carbon matching could yield 25 to 50% more revenue per contract without increasing supply. So people are willing to pay a bit of a premium, but now this will come down, right? Because if backed into a corner, someone's going to pick coal all day long, every day, if it costs us, if there isn't public pressure. But so companies want to go clean, and this gives them a bit of an incentive to do so. There are also government incentive to do so. By offering nuclear-based carbon matching, Constellation positions itself as a leader in 24/7 clean energy. Okay, it can help it win contracts from government. We know that, and Department of Defense, plus AI and tech firms under SEC Scope 2 disclosure rules. The Calpine acquisition that they recently had adds 26 gigawatt hours of natural gas, geothermal, solar, and battery. Now, it's not a big company right now, but it's probably going to increase rapidly in size over the next number of years because the amount of energy we're going to need is going to be increasing substantially. So look at that top line. As per S&P, U.S. data centers are expected to consume nearly 280 terawatt hours in 2024, rising to approximately 530 terawatt hours by 2028, excuse me. This would equate to electricity output of the entire state of Texas in 2022. So this is going to be a huge increase. How do you solve this? Well, you've got to build solar, wind, battery. You've got to build nuclear quickly, and you got to get, and the battery is going to be a big component here. But there's going to be a lot of winners in this whole thing. The winner in the battery is going to be Tesla. Okay. The winner in the nuclear, solar, wind, that will be, a lot of that will be Constellation. And it's going to feed into these hyperscalers that we've invested in order to further us along when it comes to artificial intelligence, okay? Energy reliability issues and local grid limitations are becoming more prominent in U.S. markets with high concentrations of data centers. So it's great if you have the electricity. You also have to be able to transport the electricity. So if you have a data center in Texas and you have a power plant that's a couple 100 kilometers away, well, you got to transport that energy. And there are limitations in the grid and transmission lines, and that may need a very big overhaul in order for the U.S. to actually be able to get the energy it needs to get. As a result, securing energy, especially clean energy, has become a top priority in planning new data center developments. Okay, so you can see here estimated operational and planned data center space and power consumption. Okay, so it's kind of hard to read from this chart, but this is the number of data centers in 2023, the one in yellow here at the bottom, and the number of data centers in 2028 that are anticipated to be. And this is just different cities, but you can see we're looking at a lot more data centers across the United States, okay? And the same thing up here, the planned versus what there currently is, there is a lot more to go, okay? And this is megawatt hours in year 2028 versus 2023 in the upper graph, okay? All right. All right, so Goldman Sachs forecasts 100 to 165% rise in data center electricity demand from 2023 to 2030. That bodes really well for Constellation. AI data centers, that's also not counting electric cars. AI data centers consume significantly more electricity, with roughly 40% used for computing, 40% for cooling, and 20% for other IT infrastructure. Tasks like running chatbots, such as ChatGPT, can demand up to 10 times the energy of a typical Google search, as I was saying earlier. As tech giants commit to increasing their use of renewable energy for data centers, many are also turning to nuclear power as a stable source of power to fuel data centers. Furthermore, electricity demand from global data centers is expected to increase from 1.2% of global electricity supply to 4.1. So it's going to become bigger and bigger and bigger. Now you can look at the top line, total global electricity supply. Okay, you can see, so nuclear is around 9%. You can see there's a steady rise between 2022 to 2030, okay? Now, the global data center, now we don't know how fast these data centers are going to grow, but if they grow at a CAGR, which is a compound annual growth rate of 20%, as highlighted in blue, from terawatt hours, it goes from 340 in 2022 to 1.46, 1,462 by 2030. That's an estimate, of course. Now you can see going from 1.2% of global energy to 4.08 if we're at 20%. Now, who knows? We don't know exactly what the compounded growth rate is going to be for these data centers. But what we do know is there's an ever increasing amount of demand. And Constellation stands to benefit from that very much so. Now, we're going to pivot here. We've done this in the past. We're going to start doing this again in the future. What are we looking for in the next few months ahead? So we're going to show about performance. We have beaten the index by a decent margin this year. But we're going to take a look at the S&P 500. So where do we stand? We've had a pretty good run since the April 7th bottom. It's been a very much a V-shaped type recovery. We are drifting a little bit away from our moving averages. We're a little bit extended on our Bollinger Band. So the market is a little bit overbought, or not a little bit, could be a fair decent overbought. But corporate earnings continue to come in pretty good, as we saw from Microsoft and Meta today. So the parabolic stop and reverse indicates a bull run for the S&P with psychological resistances at 64 and 6,500 respectively, which is very close to where we are right now. Okay, the S&P has support near 6250 with two of our moving averages there, the 20 and the 20-day moving average. MACD, which is moving average convergence divergence indicator, showing signs of another bull run as the faster moving averages seem to be crossing the slower moving averages from below. You can see that from the chart below. This looks, for anyone who doesn't know what all this stuff is, looks like a bunch of gobbledygook, but the reason it's so important is because it's very much self-fulfilling. So many short-term traders use these indicators. Algorithmic or computerized trading also uses a lot of these indicators, so they become pretty important. So what we're looking to do is we're writing a lot of puts, but right now we're not writing any covered calls at all. We're simply riding the wave up, and that's done us really well so far this year. We are writing puts, and we're writing puts aggressively on a small portion of the portfolio that is not fully invested. We continue to get new money in the portfolio, but we're looking to build up a decent cash position going into September and October, which are the worst 2 months of the year. Okay, now this is the NASDAQ. NASDAQ may be testing resistance at 23,350, but parabolic SAR and MACD indicators show some bullish momentum. So we've had a really good run basically since April 7th. We are expecting a bit of a pullback come September and October, and we are prepared for it, okay? So let's take a look at our exposure. Alphabet's had a great year so far. Amazon, Apple, we've reduced the Apple position. Like I said, we used to be at Apple at 8%. Then it went down to 5.5%, and now it's going to be down to 4 or 6, and now it's going to be down to 4. We still want to hold Apple. We're not as excited about as Apple as we used to be because of the lack of innovation. Until we get more clarity on what they have for future products and services, we're going to remain at this 4% level. Microsoft, exceptional earnings today, exceptional earnings. That's a 13%. It's the biggest holding in the portfolio. Microsoft also crossed $4 trillion today in market cap, joining NVIDIA as the only two companies in the world with a market cap greater than $4 trillion. Tesla hasn't done a whole lot this year. In fact, it's down quite a bit. But Robotaxi has just been launched, and we expect that to scale rapidly over the next year and a year and a half. By this time next year, and especially into the end of 26, cars that drive around by themselves. So we will continue to add to this position. We're at 11.4 right now, 12. And what happens when positions like Microsoft and Meta go up a lot in value? What does that mean to us? Well, what that means is because those have gone up in value, Tesla becomes lower as a percentage, so we can actually add to our position. And like I said, we constantly have new money coming in, so that's also good. We keep using that new money. We are going to build a bit of a cash reserve going into September and October. AMD has been an absolute tear. They are also going to benefit tremendously from this artificial intelligence chip demand revolution. And as the chip demand soars, NVIDIA cannot fulfill all those chip orders, and also a lot of people looking for cheaper options. AMD is a great solution. Stock is trading at about 170 something dollars. I think it's 170 some odd dollars. We were buying just in April. We were buying as low as $75. Tells you how fast the market can turn. Meta, 8%, exceptional earnings today. They had massive growth across the board. They beat on top line, they beat on bottom line. Eli Lilly hasn't done a lot so far this year, but our price target is substantially higher from where it is today. So we'll continue to hold that. Taiwan Semiconductor, it has been a major beneficiary of this because Taiwan Semiconductor is the most advanced fab in the world, producer of chips in the world, and they are benefiting from tremendously from artists AI demand. NVIDIA, our current exposure is a little bit more than our desired exposure, and that's mainly because it just keeps going up in value. So as new money comes in, we're not adding to NVIDIA, but NVIDIA just keeps going up in value. So it's a little bit on the high side right now. We have increased our Bitcoin exposure through IBIT from, it was initially at 4% when we initiated this position. It went to 6%. And now it's at 8%. We're adding to Bitcoin aggressively here. We're writing a lot of puts, and we haven't been assigned a huge amount, but we think we will be assigned a fair bit this week and next week. And we've collected a ton in premiums. And the last position that we went over today, which is Constellation Energy, we're currently at 2%. We would like to get to 4%, and we will do so as the opportunity arises. Okay, so put exposure. So the majority of the stock of a portfolio is long only, meaning we own a bunch of stocks. We are not selling covered calls of them because this market just keeps running away. 10% of the portfolio is exposed to puts. We are aggressive with these puts, writing them at the money or very close to the money. So we're doing pretty good there. Okay. Cash, we've got about 4%, but we're adding to our cash position, preparing for September and October. That's the real key. Preparing for September and October, those are not good months. We want to have a chunk of cash available to us to be opportunistic. Okay.
That being said, going into September, we will be looking to write some covered calls.
Yes, absolutely, Mike. Good point.
Yeah, we are going to be looking to write some covered calls. Historically, this has been not a good month. No matter what your feelings are about seasonality, and my feelings are mixed, generally speaking. I don't abide by everything with respect to seasonality, but some things I certainly do. And one of those things is that, hey, September is usually pretty grim. So, we will be looking to tactically cover some of the portfolio using covered calls and see if we can hang on to some yield there. If in the event, people come back from their wonderful summer vacations and decide that a market sell-off is necessary, right? So we will be looking to bulk up on that, but that we will not be doing until probably at earliest the second or third week into August, right? Because if sometimes when planning this out, the bloodshed may last into October as well, and we need to be very careful and tactical as to how we allocate our covered call overlay here. So I will say that. Okay, back to you, Omar.
Yeah, good point, Matthew. I'm glad you added that. We will be writing covered calls aggressively in September and October. We'll actually start writing them in August, at the end of August, and they'll be expiring in September and October. And again, the reason is because those are traditionally weaker months. We can benefit from those covered call writing, and keep a decent amount of cash. We'd like to go into September with about 10 to 15% cash. If we're at 10 to 15% cash, that'll give us a lot of money to be able to buy in. And like I said, the great thing with a fund that's continuing to grow like ours, as new money comes in, we can be opportunistic and there is a lot of money that is coming in the pipeline between August and September. Okay. Total value of option premiums. So we've received 7.64% in premiums so far, put and call premiums. Now, performance. Here's a performance. We are up 8.22% as of last Friday. Now, considering how Microsoft and Meta did after hours today, this number could be substantially higher by tomorrow. But we're up 8.22% as of last Friday. The NASDAQ in Canadian dollars, which is our benchmark, the one that we are comparing ourselves to, is up 4.98%. Okay? So the Canadian dollar has strengthened against the US dollar. That's led to a little bit lower return for the NASDAQ in Canadian dollars. But we have outperformed by a fair bit at 8.22. So we're expecting a pretty strong second half of the year. But we want to continue to outperform. That is ultimately our goal. But 8.22, we're very happy with that, considering the index that we are measured against, the NASDAQ in Canadian dollars, is at 4.98%. Now, do you want to get a hold of the fund? Here's the particulars of the fund. Okay. Now let's take a look at performance in the fall in terms of seasonality. Okay, so you can see August. Now, July is the best month of the summer months. Okay, so you can see here since 1950s in yellow, in blue is the past 20 years, past 10 years in green, and pre-election years are in the dark blue, or dark blue. You can see here August. Okay, it's kind of flattish, right? August kind of flattish. Look at September. It's clearly the worst month of the year. Since 1950, past 20 years, past 10 years, September is not great. And the first part of October, so this is the whole month of October, but the first bit of October is not great. Okay. So what we're going to be looking to do is, like I said, have a good cash position, write a lot of covered calls in September, expiring the first week of October, probably at the latest. Look to get fully invested and take advantage of seasonality going into the end of the year. Okay. All right, now let's take a look at some moving averages and some performance for August. You can see monthly averages for the S&P over the last 20 years. Let's take a look. So every month essentially is positive. You have June and January, which are flattish. February as well, flattish. August is flattish. July is a good month. As you can see, July is actually one of the best months. Actually, it is the best month over the past 20 years. And we've had a very strong July, okay? But look at September. September's not great, okay? September down on average 0.7%. The NASDAQ is a lot more, volatile, so you probably expect a little bit worse than the NASDAQ. And then October, November, and December. So again, want to reiterate, a lot of covered calls coming up, holding a good bit of cash, looking to deploy that cash into September and the first week of October. And then continue, hopefully, to beat the index. That's the key for us, okay? We're anticipating some more rate cuts in the US and Canada, although we did not get one in Canada or the United States today. Bank of Canada held steady, as well as the Federal Reserve in the United States. So both held steady, no rate cuts, but hopefully we do get some rate cuts into the latter half of the year, okay? If you want to inquire any more about the fund, please contact myself, Matthew, or David Jarvis. Our contact information is right here. And if anyone has any questions, we would love to address it. So if anyone has any questions, let us know. And as always, there is a disclaimer. So this will be available for replay on YouTube. Plus, if you are a unit holder, you will get a replay sent to you via email. So if there's any questions, let us know. Otherwise, guys, thank you so much for joining us. We're very pleased about the performance, and we look forward to continued support. And let us know if you need anything at all. Okay. Anything to add, Matthew?
No, guys, this is the dog days of summer are seeming to be actually pretty turning out pretty well. Earnings season is coming not to an end, but kind of midstream here. But a lot of the tech names are sometimes some of them are behind us. So we are looking into August to see if this rally continues. And yeah, so far this is an exciting summer from the market perspective. But that being said, guys, the market did took quite a dive in the first part of the year, and a lot of this is kind of makeup territory, right? So we'll continue to look for opportunities, kind of drive some more performance here. And yeah, the next our next fund update, we're going to be talking a lot more about how we are tactically positioning ourselves for September. Okay, so thank you so much for joining us. This will be up on YouTube over the next few days. We thank you so much for your support. And if there's any questions, absolutely ask me, Omar, or David. Thank you so much, guys.
Thanks, guys. Have a great night.